Hello everyone, and welcome to today's webinar. My name is Lawrence Choi, and I'm an Associate Director for the Corporate Segment at S&P Global Market Intelligence. It is my pleasure to moderate today's live webcast on technology M&A deals in the current environment and the shifts in growth strategies. For today's panel, we're happy to have joining us Brendan Daly and Nick Patience from 451 Research, which is now part of the S&P Global Market Intelligence family.
Thank you, Lawrence, and thanks to all of you for joining us in what is admittedly a very difficult time, not only for the tech M&A market, but for our economy at large. This is obviously the sharpest and most severe economic downturn that we've experienced, where we've voluntarily idled basically a third of our economy. So this morning's webinar, we're going to look at how this unprecedented coronavirus pandemic and the associated economic slowdown is going to play out in the multi-billion-dollar M&A market. Now, we have a sense of that from you all, right? The wisdom of the crowds there, very bearish on their outlook, and certainly that's the prevailing view for how the balance of 2020 will play out. But to understand where we're going, I wanted to just start with a quick look back on where we've come from. So what I've done here is just gone back to our 451 Research M&A knowledge base. This is a product that I head up inside of 451, and I've just run a quarterly cut over the past 4 years, looking at the number of transactions and the spending attached to them. So that blue line, that dark blue line across the top there, are the number of tech and telco transactions. And to be clear, this is tech and telco on a global basis. So it's all buyers, all target market, all geo. So this is a comprehensive measure of activity. Again, deal volume across the top. Those lighter blue bars are spending, quarterly spending in billions of dollars. And so what I'd highlight as you look sort of at the span of the past 4 or 5 years is spending has ranged basically from $60 to $160 billion, give or take, right? But if you fast forward to the far right-hand side of the slide, look at the most recent activity, Q1, $85 billion, you would think, nothing really changed, right? I mean, it's a little bit light, granted, but you certainly wouldn't know that there is a global pandemic based on the spending, right, that light blue bar in Q1. So it prompts the obvious question of, well, why not? Why doesn't this unprecedented economic contraction and this global health event show up in Q1? To understand that, you have to understand the economics of, or the sort of the mechanism of M&A. And what I mean by that is, keep in mind, right, the median duration for an M&A process, right, from opening sort of initial discussions to formal legally binding consummation is about 9 months. It's basically the gestation period of a human life. So within that, right, there's a number of lengthy stages, whether it's opening discussions, bid, counter bid, due diligence, customer checks, right? All of that takes time. And so what we saw in Q1 and how we account for that relatively strong spending level, probably unexpectedly strong spending level in Q1, is basically the fact we were spending out the pipeline. The majority of transactions that we saw in Q1 announced here on our far right-hand side of the slide was simply a fact of those deals were, for the most part, either already done but not announced, or were right at the goal line and just needed that last little nudge over to be captured in this spending totals. And to be clear, this is taken at date of announce, not necessarily date of close. So you can see there, again, Q1 not looking too bad relative to, again, this severe economic contraction that we're experiencing. However, that shows up, the coronavirus impact shows up when you look at M&A activity on a more granular basis. And this is cut, again, from our 451 Research M&A knowledge base, just looking at the monthly flow of spending. So this is, again, spending. And just to put these numbers into context, if you think back to the opening slide, right, and you average out a monthly spend, you're talking about $40 to $50 billion. So again, that's tech and telco on a global basis. And rough and tough, you're talking $40 to $50 billion over the past half decade. So as you look across this slide, right, January a little bit lighter than we would have expected, February pretty much right where we would expect a typical representative month, but notice the incredible collapse there into March, right? Spending 3/4 lower than we would have expected for, again, the typical month. That month, March, the just completed month of March, was the lowest spend total in our M&A knowledge base in 7 years. However, it gets worse. If we were to extend and add on the bar for April, right, to bring it current. Now, I know we've got a week of the month left, but if we were to sort of project out based on spending rates so far this month, we're looking at about just $4, maybe $5 billion worth of spend. Now, that is unprecedentedly low. If you want another way to think about the projected total for this month, for April, right, think about it this way. I went back in our M&A knowledge base. There were 25 individual transactions north of $4 billion last year. So individual transactions, right, single deals that eclipse the entire spending around the world for all of technology in a month, right? So April is tracking to basically 1/10 the level of a typical month that we would see. That's just how hard this coronavirus has hit the tech M&A market.
Picking up from where Brennan left off, he was also pointing out that AI and machine learning are one of the bright spots within software. And so I wanted to let you know what we're seeing in the sector, specifically which use cases across 6 industries might thrive in a post-COVID-19 world, or at least do better than others. Our data is based on a survey of 1,000 IT and line of business professionals that we did as I said, in November and December of 2019, split half-half from North America and Western Europe. So just digging in, we always ask, about a maturity question. How far along are you in your adoption of AI and machine learning? And here we're asking people, do you have machine learning in production or in a proof of concept stage, or neither but plan to within the next 12 months and then further out? And essentially 57% of surveyed enterprises have AI initiatives either in production or in proof of concept, which was a substantial increase in the 40% from the year ago when we asked this question. And just 18% having no adoption plan compared to 32% in our previous survey. So you can see the direction of travel. In a couple of years' time, we won't ask this question because the answer will be more or less everybody will have it in production or proof of concept. So this is a kind of binary question we like to ask to see, get a clock, an idea of how far people are along. Now, digital transformation is the lens, and has been the lens through which new technology is viewed and has been adopted for quite a few years now. Now, we believe at 451 Research that digital transformation will accelerate during and after COVID, and those that haven't got started will frankly get left behind. Now, the diversity of other use cases reflects, I think, the variety of benefits that this technology can bring to enterprises. It is really a really diverse use case. And so just picking up on that point, any technology that is sufficiently general purpose has opportunities in a crisis. I'll say that one more time. Any technology that is sufficiently general purpose has opportunities in a crisis. And AI and machine learning is that omnipurpose enabling layer. It's not the end in itself. You don't go out to buy some AI, or at least you shouldn't be. You use it to enable automation, enable you to derive insights from large volumes of data. But it is a general purpose technology, and that's why we think it is the most exciting area of the technology industry. So AI can bring automation optimization to all sorts of business processes, and here we ask people, essentially, we bucketed their overall responses into these categories. And so you see 17% of organizations with AI initiatives say their main use case today is security, and then sales and IT ops represent important bucket of use cases, as does process automation and customer service. Process automation, for instance, though, could include the bucket includes all sorts of things such as product development optimization, workforce utilization, and robotic process automation. And these are all areas we expect to see grow as we move through this crisis and out to the other side.